Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me is Vivek Iyer. Well, good gains of the markets is what we are seeing right now. Nifty very close to the 25,200 mark. Of course, it's still that 25-point gap that we are seeing there. But nevertheless, it has picked up from the lows. We did see it maintaining those levels, the opening gains being maintained, and there's a slight uptick from those levels. Mid-caps, they have recovered sharply now, but still in the red.
That's right, still in the red. The mid-cap and small-cap end of the markets continue to trade with minor cuts. Advance decline ratio over there slightly muted. But we have a lot lined up on the show, so let's start off with the top headlines. Stocks edge higher as Nifty trades near day's high. Mid-caps also recover from the day's lows. Auto, healthcare and utilities register gains, while realty and defense stocks under pressure.
Shares of Lodha developers under pressure after 1% equity changes hands in a block deal. Oberoi Realty also trades with cuts after 3% equity is exchanged. Sources say existing investors sold stake in both companies.
Idea Forge trades with cuts after reporting an 85% dip in revenue on a year-on-year basis. The company has also reported a fourth straight quarterly loss. Cyient DLM also trades lower after first quarter revenue and profit failed to meet street expectations, even as margins expand.
Dixon Tech trades higher on the back of a steady set of June quarter results. Profit rises 68% while revenue nearly doubles. The management tells CNBC-TV18 the order book looks healthy and guides for 40 to 45% revenue growth in FY26.
Jana Small Finance Bank shares feel the heat after Q1 profit falls and asset quality deteriorates. The management tells CNBC-TV18 that stress has carried on a bit longer than their expectations, but they are hopeful of a significant drop in NPAs over the next 2 quarters.
Okay, all right. Those are the top headlines. We do have earnings which are trickling in thick and fast. And a lot of reaction to those earnings as well. We'll discuss that through the course of the show. For now, Nifty closer to the day's high. We have a rate of 25,167, 170 around that on the Nifty currently. It has swiftly seen gains from the lows of the day as well, or the opening gains, so to say. Mid-caps, that's where the major recovery has come by. It is seeing some red, but from the lows of the day, it did get into the green for a bit, saw some more losses from there. But yes, it's a recovery nevertheless. Sapphire Foods numbers flashing for you at the bottom of the screen. EBITDA is down 7% for now. The stock is seeing cut of around 4%. That's a sharp fall from the highs of the day as well. Margins, a 300 basis point contraction that has come by as well, explains the move that we are seeing on the stock right now.
That's right. Good afternoon. So Sapphire Foods down almost 4%. One stock that actually was under quite a bit of pressure in the early part of the session was NCX. Reports indicated that trading there, especially as far as the electricity futures, was halted. But that stock has made a very sharp recovery. In fact, now up almost 1% in the session. But a whole host of mid-cap stocks is what Hormaz has on his radar. He's standing by the wall to take us through our special segment, Mid-Cap Movers.
A lot of these broader market reports are just giving us one takeaway, that the margin for error is almost zero and the slightest bit of disappointment is getting punished, as you can see from the Sapphire Foods results on the bottom of your screen. But with the recovery that you have seen in the broader markets, you start off with the gainers, and MRPL now is up 7% at the highest point of the day. And take a look at the spike that we have seen in Ola Electric. There was a very small block that took place just a few minutes back, and since then the stock is now up 6.5%. LG Equipments, and at the same time as Ola Electric, Electra Green Tech too has moved to the highest point of the day, 0.25% higher there as well. The earnings reactions, we just spoke about Sapphire Foods, but take a look at some of the other earnings reactions. Look at Credit Access Grameen. Idea Forge from its listing levels of 1350 is now down to 500, and Jana Small Finance Bank, we heard from the management earlier in the day, and since the stock has even extended its losses, now 7% lower on that stock. With the newsmakers of the day, there were 2 real estate names that were in focus after the block deals. Oberoi Realty is seeing some choppy moves, but Lodha has now declined to the lowest point of the day, 7.5% lower there on the stock. And Blue Jet Healthcare was down 10% yesterday, is down another 8.5% in today's session after the results. And Bombay Dyeing, of course, among the top among the top gainers in the volume-led front, 12.5% higher here as well. Speaking of the volume-led movers, look at Green Panel Industries here. Look at Shalby, Godrej Agrovet and Nava, all of them seeing gains on very strong volumes of anywhere between 3% to as high as 9%. And lastly, stocks that are at a 52-week high in today's session as well. Look at Datamatics is one of them, 9.5% higher on that stock. JM Financial continues to move higher. A lot of these capital market names, at least one of these names is at a 52-week high one of these days. And Paradeep Phosphates too, continuing to move higher, 6% higher in today's session as well. Back to you guys.
Okay, some interesting names there. Thank you so much for joining us as always. It's now a good time to welcome Jay Thakkar from ICICI Securities for a technical check. Jay, good afternoon. Do you think we'll build on to the gains that we've seen now and some more recovery in the broader market as well?
Hi, good afternoon to you, Sonal and Vivek. As far as Nifty is concerned, I mean, we have seen a good recovery coming in market in this week, particularly after, last week sell-off. And, the good recovery has been because of the Bank Nifty. We have seen the two private sector banks or maybe, the Bank Nifty doing quite well. The kind of recovery which we have seen, coming back there has supported the Nifty because we did see that, the Reliance had kind of a correction, 3 to 4% kind of a correction. But despite that, Nifty managed to hold on to 24,900 levels on a closing basis. And now it's back to, 25,200 levels almost. I think this bounce, Sonal, can continue until the levels of 25,400. I mean, that is the level which I am eyeing for in the short term until, this 24,900 to 25,000 range is held. More or less, still it doesn't clearly indicates that market is out of the range or, the breakout has finally come because if you look at the IVs is still around the levels of 10, the, IV percentile is still at 0.4, indicating, or maybe, one can look at the India VIX as well, indicating that there can be a jump in or a spike in volatility going forward, maybe near to the monthly expiry, which can trigger the volatility. And then, you can have those volatile moves. So you can have the downward moves as well as upward moves, unless we have a very clean breakout on the upside. 70% of the time it has happened so that we have seen the volatility, and 30% of the time it has been observed or witnessed that, we have seen an uptrend. So if at all Nifty breaks above the levels of 25,400, Sonal, it would be safe to assume that it will resume the uptrend and maybe inch towards 25,800 to 26,000. Likewise, for Bank Nifty, the levels to keep in mind are 57,500. Above those levels, one can safely assume that the breakout finally is there after 1 month or 1.5 month kind of a consolidation, and thereafter Bank Nifty can inch towards 59,000 to 60,000 levels as well. Else, you can see that volatility spike in market. So these are the levels to keep in mind. Now, since in the short term, Sonal, my view is a bit positive for a bounce back. I have two buy recommendations from the mid-cap segment. The first one is on Chambal fertilizer. One can buy Chambal at around the levels of 558.59, placing a stop loss below 550, and one can target 575 to 590, mainly on account of short covering. We have seen a positive divergence here, but we have seen short getting covered as well. So on account of short covering, Chambal can see a good bounce back. In second short covering candidate is Syngene. It has managed to take off its previous swing highs of around 680. Momentum has turned positive with a positive divergence. But interestingly, from the pharma pack, we have seen a good short covering out here as well. So one can see the levels of 710 to 725 on the downside. 670, 75 is a good support range. Till those levels are held, short covering cannot be ruled out in Syngene as well.
Thank you so much, Jay, for joining us, giving us your view on the markets as well as your individual trading calls. Syngene, remember, reports its results later today. Let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. You're still tuned in a mid-cap radar. A lot of stocks in the broader markets which are reacting to their earnings. Idea Forge, it's trading with a cut of over 6%. Ria is joining us now to tell us what did the numbers look like and what is the management saying. Ria.
Well, yes, Sonal, Idea Forge has reported a very weak set of numbers in Q1 of FY26. They've seen a sharp fall in the revenue, down about 85% on a year-on-year basis and down 37% sequentially as well. The gross profit margins have expanded by a lot in this quarter. up to around 61.7% versus just about 33.3% in Q1 of last year. But this margin variation is largely dependent on the product mix of the orders that were delivered during the quarter. They've also seen heavy EBITDA and net losses of rupees 15 crores and rupees 23.5 crores respectively in this quarter. Remember, the company has been loss-making for the last 4 quarters, and the losses have been widening in each quarter. But in quarter 1 of this year, the losses have slightly narrowed sequentially in this quarter. Coming to the order book then, the order book has expanded quite significantly to rupees 144.8 crores versus just about rupees 13.6 crores in quarter 4 of FY25, since they've secured a very large emergency procurement order from the Indian Army worth about rupees 137 crores for mini UAVs. Now, going forward, the management has said that they have an L1 opportunity pipeline of rupees 400 crores, which remains relatively intact going ahead, and they're expecting to close this within this and the next financial year. And remember, this is excluding the emergency procurement orders that they're expecting to receive in this year as well. They're also targeting to turn profitable in the near term, and they're expecting an improvement in the working capital cycle as well once these emergency procurement orders get executed this year. And in fact, they've also highlighted that the next phase of the PLI is expected to be rolled out soon for drone manufacturers, and this will be a big push for the industry and for IdeaForge as well. But nonetheless, the street is not liking the numbers, and the stock is still down over 7% today.
Thank you so much, Ria, for joining us and giving us a sense of how exactly the results of IdeaForge panned out. Well, a couple of stocks of the radar. M&M, Mahindra and Mahindra shares, at one point of time, they had crossed over the 3,300 crore mark, have seen a bit of a dip and now trading near the day's lowest point. And another stock, which is Loda, earlier known as Macrotech Developers, that particular stock, remember earlier today, it saw a 1% block deal from an institutional equity investor. And that stock now near the day's lowest point, again, over 7.5% lower. Another stock from the small finance bank space, which is Jana SFB, is down over 6% and continues to remain under pressure. This is after the management told CNBC that they continue to see some stress going forward as well, and their NPAs will only come down significantly Q3 onwards. Let's listen in.
It's a short-term pain for sure, because when your MFI book drops, you do lose revenue. On top of it, you do have increased credit cost. And of course, for collection, you put in extra collectors. So the cost line also doesn't help you. So all 3 lines have not worked for us in the first quarter. We'll see some relief on the cost side because we are fully capacitized for collections. We should start seeing some positive shoots on the MFI book, on the growth side, and on Q3, then we should see the drop off in the NPAs. Q4, if all goes well, as you know, MFI does reward very well in good times. So if all 3 lines go right, then I think it should be very positive. We are at 71% secured. We would like to get to 80. We would like to put more and more of our unsecured book into the guarantee programs. 36% achieved. It was 28 in March. It is 36 in June. We'll probably see a 45 to 50 range by September. So 2 activities. Third, on the credit cost, I think it's very important to understand. See, a regulatory provision that is required is 46 crores for the quarter. On top of that, we have done accelerated provision, which is not required by regulation, of 150 crores. So the only way to think about it is, yes, we would like to create buffers for provision unless we don't see a very clear environment ahead of us on the MFI piece.
All right, that's the word coming in from Jana SFB. We'll slip into a short break now. When we come back, we'll get you more on the markets and a lot of stock-specific action that's been happening. Stay tuned.
Welcome back to Midcap Radar. Well, the recovery that we're seeing in the markets continues. 2 very important results as far as the mid-cap IT space is concerned. One company that market will be watching out for is Persistent Systems. Rima joins in with what the street is expecting from this particular set of numbers.
Thanks so much for that. So for Persistent, expect a steady and a strong performance this time. Dollar revenue growth seen up 4.3%. Constant currency revenue growth higher by 3.8%. So approximately about a 3.5-4% kind of a top line growth. And that's been the run rate for the company over the last couple of quarters. That trend will come up for you. Last year, it was closer to 5.5%. But things have been tougher. And this time, the street is working line with 3.5-4%. EBIT margins flat with a positive bias. Profits seen up close to about 3.5%. What to track in terms of management commentary, whether they hold on to their $2 billion revenue aspiration by FY27, and the longer aspiration is to get to $5 billion of a top line, and they're also looking at some margin expansion.
Okay, all right. So that's about Persistent Systems. What about Coforge, Reema?
So, Coforge has been the best performing mid-cap IT company in terms of revenue growth and even stock price. This quarter too expects industry-leading revenue growth at 6.5% on a sequential basis, and growth rates for the company have been exceedingly strong. Now, the top line that we're talking about will be driven by the large $1.6 billion Sabre deal that they had announced very recently. Plus, there were some acquisitions, TM Labs, Rhythmos. They will all contribute to the top line this time around. Margins are seen at 13.5% versus 13.2%. Profits seen up close to about 10%. As I said, the stock has done very well, up 50% in the last 1 year. In the last 3 years, it's given a return of 150%.
Thank you so much, Reema, for joining us and giving us a sense of what exactly to expect from Persistent as well as Coforge when they report their results later today. Well, it's now time for our special segment, Quarter Se Quarter Tak, where we bring you earnings expectations from each sector. Today, Vamakshi will tell you on how Q1 FY26 is expected to be for the capital goods companies. Over to you, Vamakshi.
Well, a steady quarter is on the cards for capital good players as healthy order books begin converting into revenues. To start with, all eyes are on order inflows. Momentum has held up well this quarter, supported by sustained traction in power T&D, renewables, and the buildings and factories segment. After a prolonged lull, the railway sector is finally showing signs of recovery since April. Early days, but the trend is turning positive. The standout performer, Hitachi Energy, with order inflows expected to surge fourfold. BHEL is likely to post a strong 37% year-on-year increase, while CG Power is set for solid double-digit gains. On the other hand, Thermax and ABB may see mid-single-digit growth, and Siemens could be the only name in the red with a slight dip in order inflows, a rare miss in an otherwise upbeat sector showing. Next up, revenues. Capital good companies are set to post an average year-on-year growth of 19%, clear evidence that the order backlog is translating into billing. Hitachi Energy once again tops the list with a 37% surge in revenues thanks to the execution of the Mumbai HVDC project. BHEL and CG Power also stand out with over 20% growth each. Even Cummins is expected to clock 12% growth despite dealing with a high base from last year's pre-buying cycle. ABB and Siemens, after reporting low single-digit revenue growth in the previous quarter, are likely to post revenue growth of 11 to 12%. Thermax is likely to maintain its 12% growth trajectory too. Margins, though, tell a more divided story. Commodity prices, copper, aluminum, zinc, as well as pig iron have dropped. But margin expansion? Not for everyone. Expect margin compression at ABB, Siemens, Cummins, and CG Power, largely due to high base effects and moderation of pricing power. But 3 names buck this trend. Hitachi Energy with a sharp margin gain of 750 basis points, BHEL with a 600 basis points improvement thanks to improved operating leverage, and Thermax aided by lower losses from bio-CNG and other projects. Profits mirror this margin divide. Hitachi Energy is expected to steal the show this time around with a 13.5 times jump in its profits. BHEL is likely to stage a turnaround as well, swinging from a 211 crore loss last year to 71 crores in profit this time around. Other than that, Thermax is set for a 26% jump, CG Power may rise 13%, and Cummins should post double-digit growth in its profitability. ABB India is likely to report over 7% growth. Siemens, however, might lag with the slowest net profit growth amongst its peers. As far as valuations are concerned, there's been a reset, a moderation for most players, reflecting the impact of slowing order inflows and weaker infra spend. Hitachi Energy still trades at a premium at 125 times, but the broader peer group, including ABB, Cummins, CG Power, BHEL, as well as Thermax, are more reasonably compared to earlier levels. In summary, strong order inflows, healthy revenue conversion, and selective margin improvement set the tone for Q1. With valuations not as overstretched as earlier, this quarter will be about operational delivery and who's best positioned to turn this backlog into bottom line strength.
Okay, we take that point. Important analysis of what we can expect from the capital goods space this time around. For the markets, continues to be a good day so far. If we talk about individual movers, MRPL, for instance, should come up for you on the screen. It is up 7% right now. Remember, it reported weak set of earnings this time. The stock was down 7% on Monday after it reported numbers, but since then it's been a one-way move. The indication is that maybe the refining scarcity is something that would aid GRMs going forward. Not enough refining capacity is being added, and that's something that could aid standalone refiners like CPCL and MRPL as well. If we look at the Midcap index, it has made further recovery from when we started the show. It's down just 40 points right now. And even the advanced decline ratio, that should come up for you on the screen. That is the one which is indicating the it is in favor of declines right now. That continues to be the case. If we talk about the movers in the broader markets other than what we spoke about right now, Sona BLW Precision, that stock should come up for you on the screen, 3.5% higher. We had Vivek breaking that story, which was later confirmed about a Chinese player, collaborating with Sona BLW, and that seems to be exciting the
Last
stocks
couple
even
of
more.
days, there was some news flow regarding some worries as far as the family was concerned, especially post the unfortunate demise. So that kept the stock under pressure. Today, the stock has recovered quite sharply. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.